All right, let's dive into the latest earnings from Hindustan Foods Limited. Now, they're a huge player in India's contract manufacturing world, and they just posted some absolutely incredible results. We're going to break down exactly how they did it, the major headwinds they faced, and what this all means for their future. So let's get right into how they pulled off this record-breaking quarter.
Okay, so right off the bat, here's the big headline. Hindustan Foods, or HFL as we'll call them, just had its most profitable quarter ever in their entire company history. This is the news that got everyone talking. But honestly, the really fascinating part is the story behind this number.
And you don't have to take my word for it. This comes straight from the top. The managing director, Samir Kathari, points out that this record wasn't set in some perfect, easy-breezy environment. Not at all. In fact, it was just the opposite. He talks about significant challenges, which, makes this whole thing even more impressive. So what were these challenges, and how did they manage to power through?
First things first, let's look at the actual numbers, the core metrics that really define this success and show us just how well they performed. So, what's really amazing here is the solid double-digit growth right across the board. You've got total income up 15% year over year. I mean, it's almost touching that 1,000 crore mark for the quarter. And then look at the bottom line. Profit after tax is up a whopping 17%. These are not small wins, people. This shows a company that is performing incredibly well across its entire business.
Okay, so if the numbers look this good, what were those challenges the MD was talking about? This is where the story gets really interesting. It turns out HFL was fighting battles on two completely different fronts.
Domestically, they got hit with some bad luck. Unseasonal rains came down right when demand for things like ice cream and beverages should have been going through the roof. That's a direct hit to a couple of their really key growth areas. And at the exact same time on the global stage, you've got all this uncertainty around trade tariffs, which was making the future look, well, pretty murky, especially for any company tied into international supply chains. And that leads to a fantastic question. You're probably thinking, wait a second, HFL's production is all for the Indian domestic market. So why on earth should they care about global tariffs? And that is a crucial point, and the answer tells you so much about how business works today. The MD has this great analogy for it. He calls it the butterfly effect. See, even though HFL makes stuff in India, for India, their biggest clients are these massive multinational corporations. And those giants have to balance their supply chains all over the world. So a change in tariffs in, say, Vietnam or China could make them completely rethink their entire production plan, which could then circle back and impact their orders with a domestic partner like HFL. It's just an amazing reminder of how connected everything really is.
So, let's get this straight. They had a domestic slowdown because of the weather and global economic uncertainty, and they still broke records. How? Well, their success really boils down to a few core strategies that are just firing on all cylinders.
Okay, the key to understanding how HFL can be so resilient is their two-part business model. Think of it like this. Dedicated manufacturing is like a long-term lease on an apartment. It's stable, low risk for established products with predictable demand. It gives them secure long-term money. Shared manufacturing, on the other hand, that's more like an Airbnb. It's flexible, higher risk, and used for newer categories like footwear, where demand can jump up and down. This dual approach gives them the best of both worlds, stability and agility. And here is where that smart strategy really pays off. Their first growth engine, ice cream. So even with the bad weather, their Lucknow facility was running at peak capacity, just cranking out product. A brand new plant just opened in Nashik, and they're already building another one. And here's the real kicker. Their goal is to become the #1 contract manufacturer for ice cream in the entire country within just 2 years. That's some serious ambition.
And the second engine? Footwear. Now, this part of the business has been in a bit of a turnaround, but the results are really starting to show. They're ramping up production, and get this, they just hit their highest ever monthly sales back in June. It's just a perfect example of their diversification strategy working, with a newer business really starting to pull its weight.
So this record-breaking quarter wasn't some kind of fluke. It's the direct result of a very deliberate, very aggressive investment strategy. Let's take a look at the money they're putting behind all this ambition.
To really get a sense of their ambition, you got to follow the money. So they're starting from a really strong foundation, an asset base of about 1,500 crore rupees. This is the platform that they're building everything else on.
And they're not stopping there. They are immediately adding another 250 crores right on top of that, and they are doubling down on their growth engines, pumping 200 crores straight into ice cream and another 50 crores into footwear.
And all of this investment is driving towards one really big goal: growing their asset base to around 2,000 crore rupees by fiscal year 27. This isn't just about keeping the lights on, this is a massive statement of intent for some major expansion.
Okay, so we've covered the numbers, the challenges, the strategy, and the future plans. So what's the big picture? What are the really crucial points that we should all walk away with?
So let's boil it down to 4 key takeaways. First, this is resilience in action. They didn't just survive major headwinds, they thrived. Second, their diversification into new areas like ice cream and footwear is clearly working. It's protecting the whole business. Third, they aren't just sitting around waiting for growth, they're actively building it with a huge investment plan. And finally, that global question mark, that butterfly effect, is still the key variable we all need to keep an eye on for the future.
And all of this leaves us with one final thought. HFL's story is just a fascinating case study. In a world that seems to get more uncertain by the day, is having a strong, diversified, but fundamentally domestic-focused business the best defense you can have? It's a strategy that seems to be paying off big time for them. And it's a question I bet a lot of other companies are asking themselves right now. Thanks for tuning in.